This is question 4, and we're going to go to question 4.2, 4.21, 4.3, 4.4, and 4.5. 4.2.1, calculate the following financial indicators. First of all, debt and equity ratio, and then the percentage return earned by RASL, and round off the figures to 1 decimal point. We've got our debt equity ratio. In order to get our debt equity ratio, we have to use the following formula. So that would be your non-current liabilities against your owner's equity. Let's take a look. Our non-current liabilities, according to our information, and we're using for 2015, non-current liabilities, in this case, is 293,520. 293,520 against the owner's equity. Owner's equity for 25, 1603,740. 1603,740. The way we do this, we always want to get one of them as 1. In this case, we want to get the owner's equity to 1. So what do we need to do that? We need to take the 1603,740, divide that by 1603,740 to get to 1. What we do on this side, we do on this side. So we have to take the 293,520 divided by 1603,740. And that gives us 0.183. If we round it off to 1 decimal, it will become 0.2. Percentage return earned by RASL, for that particular one, we have to use this formula. Return earned by a partner. So is the amount earned by the partner divide that by the average equity of said partner. And the way we do average equity is there's always some form of division by 2 because it is average equity. I multiply that with 100 over 1. So we can go and take a look. What was the total earned by each partner? In this case, we want RASL. So RASL, she had a salary, interest on capital, she had no bonus, and her share in the profits were the following. So this is the primary plus the secondary distribution. So in total, she received 267,390. Divide that by the average equity of that particular partner. The average equity of that particular partner is the following. This is the owner's equity. So it's 1603,740. 1603,740 plus the one from the previous year, the 904,520. 530, 904, 530. But we're talking about average. So we have to first add them up. And that answer we divide by 2. Times 100 over 1. So that comes down to 267,390. And according to our bottomless rules, we have to do everything in brackets first. So 1603,740 plus 904,530 equal that amount. But what do we need to do? Divide that by 2. Gives us an average owner's equity of 1,254,135 times 100 over 1. So we take the 267,390, divide that by 1,254,35 times that with 100, gives us 21.3%. That is the percentage return earned by Razzle. Do you agree with Razzle's opinion that the business has a sound liquidity position? Let's take a look at the liquidity positions. This you will find in the financial indicators. Okay, liquidity positions is usually this one, the current ratio, the asset test ratio, the debtors collection period. Creditors payment period, I'm questioning at this particular stage. Right, so let's take a look. 2014 was 2.6. This year it is 1.7. The ratio should be at least 2 to 1. This ratio should be at least 1 to 1. So you can see the current ratio went down a bit and it's beneath 2 to 1. However, your asset test ratio went up. So that's a positive. And the debtors collection period went from 40 days down to 30 days. So which means we receive our debtors money a bit earlier, where they used to take 40 days to pay. Now they're taking 30 days to pay. You can have here yes or no. If you say no, you have to talk about the current ratio that went down. If you say yes, you have to talk about the asset test ratio that went up and the debtors collection period that went up. However, I'm putting a question mark with the creditors payment period. Yes, it went from 25 days to 45 days. So where we used to pay our creditors within 25 days, we're holding on to the money and we're only paying them after 45 days. Therefore, I'm questioning this because it's usually 30 days payment period for creditors. So although we're paying only after 45 days, it's not really good for our credit record. So we should actually try to get this one within 30 days. 4.3. Dazzle is not satisfied with the return on equity. Quote figures to support why she feels this way. Dazzle started off with a balance in a current account of 3,600, which is not a lot. However, Razzle had a negative balance of 74,000 Rand. Dazzle got more than a fair share of the profit. As a matter of fact, she got way more than Razzle. So together with that, she actually is better situated in a partnership than a partner which started at a negative number and after this closing balance will still have a negative number, where she will have a positive number. So she is actually contributing more to the partnership than Razzle at this particular stage. It can be the fact that she also gets a bonus, can also be the fact that she works harder. So she maintained a positive current account balance. Razzle's is negative, hers is positive. She should not feel this way, because she is actually contributing, or her contributions is actually going well, as opposed to her capital contribution, which is only 600,000, where Razel's is more. So her money is working hard for her. Two different ways to finance the extensions of the buildings. In this particular case, you can have any of the following. Increase the capital contribution. Another one is to take the financial assets, or use the financial assets. They can get a loan. That would be some of the ways to finance that.